estate by Azuka. Today's video will go over what the costs and closing costs entail. So the first time home buying process can sometimes be a lengthy and overwhelming process, and there are different fees that you as the borrower are responsible for. But first, the closing date is scheduled when the lender's attorney, your attorney as the borrower, and the seller's attorney all agree on a date. You will only sign mortgage documents during closing and will be provided with the keys to your new home here. Your attorney should also let you know ahead of time to bring a certified check to pay for these closing costs. So with that being said, here is a detailed list of the 13 closing costs that you need to know of. Number 1, application fee. This covers the cost of processing your request for a new loan and includes costs such as credit checks and admin expenses. The application fee can vary depending on the lender and the amount of work it took to process your loan application. Number 2, appraisal fee. It's important to a lender to know if the property is worth as much as the amount that you want to borrow. So the lender needs to verify the amount you need for a loan is justified and make sure it can recoup the value of the home if you default on your loan. Now, the cost of the appraisal can vary depending on the property type. From my experience, I've seen ranges from $500 to $600 for a single family, co-op, and condo, and about $700 to $1,000 for a multifamily. Number 3, credit report fee. This is a charge ranging from $15 to $30 from a lender to pull your credit report from the 3 main reporting bureaus, and these are TransUnion, Equifax, and Experian. Number 4, tax service fee. Now, this fee is assessed and collected by a lender to ensure that the borrower pays their property taxes on time. And here, lenders want to protect their access to collateral if a borrower does happen to default. Number 5, flood certification fee. This is a fee charged to a certified flood inspector to determine whether the property is in a flood zone, which would require flood insurance. And this is a separate fee from your homeowner's insurance policy. So in the end, if you are required to pay flood insurance, you can also escrow it along with your taxes and insurance. So this just means that you can combine your mortgage payment with your interest and your taxes and your insurance along with your flood insurance all in one instead of paying them separately. Part of the flood certification fee also includes ongoing observation to monitor changes in the property's flood status. Number 6, bank attorney fee. So this is pretty self-explanatory. Every lender has their own attorney, and here they oversee the entire closing process. Number 7, recording fee. This fee may be charged by your local recording office, usually a city or county clerk's office, for the official processing of public land records, and it's usually about $125. Number 8, survey fee. This is a fee charged by a surveying company to check property lines and shared fences to confirm a property's boundaries. Now, it's generally between $300 and $500, but it can be higher if the property is large or has unusual boundaries. Number 9, title search fee. A title search is conducted to ensure that the person selling the house actually owns it and there are no outstanding claims or liens against the property. Title search fees can range to about $200 to $300, but of course this can vary. And the search fee may be included in the cost of the title insurance. Number 10, title insurance fee. So this fee just protects the lender in case there's an error in the title search and someone makes a claim of ownership on the property after it has been sold. And coverage normally lasts until the loan is paid off. Number 11, real estate taxes. So this is considered a prepaid cost, and at closing you can expect to pay any pro-rata property taxes that are due from the date of closing until the end of the tax year. Number 12, homeowners insurance. So this fee is also considered a prepaid cost, and a lender usually requires prepayment of the first year's homeowners insurance premium at closing. And finally, number 13, prepaid interest. This fee is also considered a prepaid cost, and your mortgage lender will collect prepaid interest at closing and place it in an escrow account to be applied to your first mortgage payment. Also, a side note, your own attorney fees are separate from these closing costs. Alright folks, this is the end of the video. Thank you so much for watching, and be sure to like this video, give it a thumbs up, and subscribe to this channel to ensure you always have access to this valuable real estate content.